I'm going to start by looking at this workbook, which I've opened up here. There's a link to it right on the desktop. It's called Bank Reconcile, as you see up here. And within the workbook, there are several tabs or worksheets. We're going to focus in this video on the one labeled Reconciliation U.S. Bank ADJ Tax. And you can see there's a half a dozen or so columns in here. Several of them are obvious and intuitive. The date of the transaction, the type of the transaction, and I use the same terminology that U.S. Bank Online does, and we'll be opening the U.S. Bank website. Actual certain estimate. That is a convention I've created whereby if we go back in time a little bit here, it makes more sense. Notice I have a filter out here. So I'm filtering only for 2021 going forward from March and April. But let's go ahead and open it, or going forward from April, sorry. So let's go ahead and open up March, and you can see that it goes back in time. Now these A's mean that I've already done the process, we'll see in a little bit, of basically reconciling the checkbook. But the sequence is actually as I show here. It's E, C, and A. In other words, there are certain transactions I project for that are estimates. Now, the clearest example is like for the U.S. Bank credit card. I have a plug for all of those U.S. Bank transactions paying off the credit card balance. So I call that an estimated. If it's a fixed transaction that I know how much it's going to be, like all of our retirement contributions or Ted Zell money or an MPR deduction, I'm going to call that C, as in certain. In other words, we know the amount it's going to be. And the only difference between C and A is that the transaction has actually then shown up in U.S. Bank. And E will become a C once I know, say, if this is for probably May here, so I'll get the statement. It'll show it was really 38.47. So I'll go ahead and change that. And we'll see how that happens with a real exercise in a bit here. So moving over to column D, these are either who's paying us or who we're paying. And we'll come back later on as to which of these are automatic versus which to have to be handled manually. Then over here, these are the amounts, and of course negative amounts are shown with the parentheses, positive amounts otherwise. And then finally the balance over here, and this is just applying in spreadsheet format what you would have done forever, back in the old days before there were spreadsheets. So let's say this balance right here. So we're in cell F2867, and that cell is calculated, if you look up here, by taking cell F2866 plus, F2865 plus E2866. In other words, let me clear that up here so it doesn't get, in other words, this amount is calculated by taking this plus this. That's all that's happening. And it's a plus because if it's a negative amount, it's going to be treated as subtraction. If it's a positive amount, it's an increase. So that's sort of the heart of all the way the calculations are done. And you'll see as we do it from week to week or however often you adjust it, you have to copy forward these amounts. So say, for instance, let's say, for instance, this really number should have been $10. Well, you'll notice it actually will adjust everything. But if I had, for instance, inserted a new row, what I might want to do is just copy that whole thing down. Now, in this case, it won't make any difference because it was just copying an individual, or we were just adjusting a value over here. And in Excel, you can always undo, with the undo marks up there. So let's go on to number 3 here, budgeted amounts, budgeted deductions and payments. So I've enumerated all of the automatic deductions that are of fixed amounts. And you can filter to look at those if you want. So, for instance, if you wanted to see all the payments set up for American Family Auto, you can, easiest way is to uncheck everybody and then like so, and it'll hide everyone except those. Or maybe you want to have the auto and the condo for American Family, like so. And these amounts, a number of them are static from year to year, as you might imagine, such as the JP Morgan Chase. That's our mortgage payment. The NPR amount is fixed, but these others will bounce around. Or like during pandemic, the American Family Auto went down because they gave us all a break because people were driving as much. So that is the largest part of the deductions that we have. Now, there's Excel is a fixed deduction as well, except because we're on this plan with them where they average. We'll just bring everybody back up here. They've averaged out that we're going to spend $50 a month. So if you look at the schedule for Excel, bring that down, highlight Excel, you can see that it's all teed up to be $50 a month. Now what they will do, however, is at the end of the year, they'll send out a notice that says, well, it actually was a little less than that, or it was really a little more than that on average. So there'll be it's only been a slight change. An automatic deduction that I've set up for 4 times a year, and we'll come back to this in a couple of the future videos, are the estimated taxes. And that's for both the federal and the state. And I'm not going to dwell on this right now, but they are out there, and they are set according to the dates that the federal and state have prescribed, which are, and you can see them there. These are the amounts for federal estimated tax and state estimated tax. And those are the only tax deductions, withholding that we have. We used to take some out of your Social Security, and we ended that because it's really much cleaner this way, and we can control it for reasons I'll talk about later on. Let's scroll down here. Automatic deduction for checking, but it varies month to month. Well, that's a one-off situation, or that's what's unusual about Target. So I've budgeted $50 a month, but you can see that's an E, or an estimate. And they send out an email that tells you what that's going to be. Now, they will go ahead and make the deduction. And if you look back, say, into March, they're around the 15th or 16th of the month. Yeah, you see, so there's the amount that was actual. So it was a little higher that month. So after I've gotten that notice from them, I will go in and plug in the actual amount, and temporarily it'll be a C for a certain. I may change the date as well, because I'm guessing as to when these dates are based on just practical previous experience there. The next one is where we've budgeted in the worksheet, but they have to be manually processed. So Ted's payment through Zelle is out there and set for every other Friday. And there's an example right there. And we'll see how that'll reconcile as well. And in a sense, U.S. Bank is the same way, although it's a different cycle. It's a monthly cycle. And they will, we know, based on going online to the U.S. Bank site, they'll tell us, or they'll say when is the cutoff for this month. And so then once I know that, I can go out and change that U.S. Bank credit card. So in other words, the one that's going to be deducted in a few days here, it's showing certain, because it hasn't happened yet. But I know the exact amount, and I also change the date. And I will sometimes on these dates, I'll put a fudge factor, and I might back it up a day, particularly if it looks like the date is on a weekend, or that's usually where I'll just back it up to make sure it gets there on time. So those are all of the sort of fixed deductions. Now, the fixed earnings are just kind of the flip side of the coin. And these are all set up as direct deposits here. And if you wanted to just get a quick look at them, one way to do it is you could just go to the amount and click on a number filter and say greater than 0. That'll show all of the ongoing predicted amounts. And those are set up at the beginning of the year. And you'll notice the vast majority of them are certain. In fact, maybe all of them are. Because we know what IBM Honeywell Retirement haven't changed for years. We know at the beginning of the year because you get a letter from Minnesota Teachers and PERA, and you get an announcement from Social Security. And likewise, your U.S. Bank is also fixed. Now, the Fidelity parable, formerly known as Thrivent, they occur twice a month, and they are different amounts. So, like for instance, here's what you see for mid-month February, and then here is mid-month or beginning of the month. Excuse me, misspoke. Mid-month May and beginning of the month June, and you see there are different amounts. They're coming from different accounts. One is from your account, one is from my account, and this is has been changed over time. I've tried to make it the smallest possible amount, and that's why, in fact, what I planned on at the beginning of the year, coming out of taxes, I actually overestimated the amount that we needed, which is why I sent a note to Matt Stockman to dial down the amount. Now, we get into one-off situations if we go into, and these can be things like a check to deposit, and let's go back to, I'll put everything up, or I've got a deposit coming up from doing that website work. You'll see that as part of the reconciliation when we go through that. So anyway, those can be just added in as needed. Like here's something we wrote a check for Perspectives Vision. That was a net that we owed them. The same here for this was like for your mother's People magazine subscription. And so I wrote the check here, but earlier on I had already transferred the money out of her system. So you'd probably see a transfer from Madeline going back a few days before that. Now I'm going to go on to here. Next we'll actually open up signing on to U.S. Bank and try to squeeze as much as we can into the screen here. Now I'm going to have a whole nother video on URLs here, and which includes accessing the bank record. But you can see it's up here on my Chrome browser. The Chrome browser icon is at the bottom there of the page. And I should get rid of that key ID and PW. That was a problem I had earlier. But you can recognize the U.S. Bank logo. So we can open that up. And you want to make sure when you're doing the login that you pick the one that is our account. Now I'm going to have a separate video talking about your mother, and Google Chrome will save the username and the password in most cases for most sites. Now there are a couple of oddballs out there, but we'll deal with that in that other video. So I'm going to bring this up right now and then pause for a moment just to rearrange the screen. I realized one thing I forgot to mention. You'll notice there's a column G as well in the workbook, and this is, as the name implies, it's just for comments. It's to remind me of what something is if it isn't perfectly obvious, and has no bearing on the calculations. It was more important when we were itemizing tax deductions than probably would be going forward, but it helps in terms of reminding if I can't remember what something is. Anyway, so we'll talk up here on this beginning of the outline, point 5, balancing. How often? Weekly. I'm a little anal, especially if I'm expecting something like this payment from the website work. I may do it every couple of days because I just want to see if it's out there. So we've already signed on, and then we want to go over to the checking account, and their drill down is my accounts, choose an account, and then checking. And you can see you have to scroll down a little bit, but it's showing current transactions. They have upgraded their user interface here. It's a little friendlier looking, at least on mine. It seems to me for some reason, like on your mom's, they haven't done that yet, or I don't know what that is. Maybe when we look at it later, we'll see it has been upgraded as well. Anyway, so what we want to do now is square what is projected out there versus what has actually happened. So as it says here, we're going to pick a start date. That's really needs to be correct. Start date on the last record indicating A in column C. And I might need to go back here just a second to open up March because we might have still had a transaction from back then. All right, so I go down here, and so it looks like the last is around March 24th. So what I want to do then is download from March 24th, and this is again, I'm on checking, which is right, and I can pick the date off the calendar, or I can just type it in through today. And you want to make it in spreadsheet format, but in CSV, comma separated value. That's just a standard way of looking kind of at a temporary ASCII format file that you're not going to save it in that format, but it's like an interim step. US Bank will push it out in that format, then I can read it in that format. Now, a couple points here. You'll see that note here, sometimes the CSV worksheet doesn't show the last few transactions that are actually displayed online. In other words, if there might be like a future dated transaction here that doesn't show up on this CSV output. And as I say here, it seems to occur like if they pre-book, or I don't know what the right word would be, but something that might be happening on a future, the next Monday. It's on, say we're on a weekend. And as I said, don't ask me why. I don't know why the system works that way. So you just, if that's the case, don't worry about it. Just pick up those rows the next time. So one more time, we'll go back here to download. We said the last date was March 24th, so we're probably be safe to say, well, we can say March 24th if it's possible there were another transaction on that date. And it's going through today. So then I can click on download, and it'll take a second. And then it comes up here in this very kind of crude looking format. But that's good. That's what we wanted to see. So first thing I do, and I might not have mentioned this in the outline, is just for aesthetic purposes and making it easy to read, is to go to change it to make it look like currency there. And there, I've experimented with different ways of doing this. You might find a different, better way to do it. But as I say here, I look at the number of rows with transactions. So, well, there are 19 rows, but only 18 of them are transactions because the first one is the first row is actually just a header row. And it's sort of the same order of what I have, although I have this additional field of the ACE, which we'll see here in just a moment. So I'm going to go down then. This is what I'm describing right in here. I'm going to go down after that last record, and we said there was 18 rows up here. So, and yeah, I don't have to be exact. I can, put in a bunch of rows here, and then just straighten it out later on. All right, so what I'll do then is bring over these various records, and I could copy. I prefer copy because, although you could do cut. The thing is, then if you cut, then you lose that record from over here. Now I'm going to use this column. I'm going to skip by deliberately the ACE column there, actual certain estimate, paste that in. Then over here we can paste in the amount, copy and paste in the amount. Like so. Okay, and I overshot the number of records I have here, so I can, delete all this, all these blank rows. Now, I'm going to, at this point, we don't really need this thing anymore. I'm not going to delete it, but I am going to push it out of the way for the time being here. And at this point, it's just really kind of a clerical exercise. And what we want to do is match up what's shown up here, or up here, with everything that's shown down here. And what I'll do is just go through it and literally move these records around. And because there's nothing more boring than watching a guy do data entry we'll speed up this part of it and then stop and look at it at the end. So at this point, I've got all of the transactions from the bank plugged in and lined up with the correct names and dates and the amounts. So I'm going to get rid of now these blank rows. And I'm also going to then notice that it comes up with the formula doesn't know what to do because there's this gap. So I'm going to just pick the last time the formula appears and just drag it all the way to the bottom. And if we've done everything accordingly, we should find that the amount in that final transaction, which looks like it was to the Groveland, should be the same as what is showing as the U.S. bank balance. So let's go ahead and give that the acid test here. So I've got the bank record up top, and we can look at what they're saying the balance is, and then we can compare it to what we're showing down here as the balance for the last actual transaction. And you'll see they tie out correctly with an asterisk here. So there's 12866.35, 12866.35. Now, this is a perfect example of something I said earlier, whereby this is a future transaction, even though it's dated today. What these abundant guys told me was that it would be there in your bank account on Wednesday, which is the 7th. So for some reason, U.S. Bank is showing it here, even though it's not going to really appear until tomorrow. So, but for that kind of oddity, everything ties out just like we would expect. Now, if this looks too putsy, I mean, one way you could simplify it is to just, you don't care about that everything looks pretty here, spelling out Honeywell retirement or whatever. You can just go with what came in on that CSV file, like right here. And again, it's, it's a little bit cryptic, and that's why my practice has always been to clean these things up. And I can't do it like with lookup values and some other more fancy stuff in Excel, because these things don't always come in consistently. So it's just part of the drill I've learned. So I'm going to throw away this CSV file. To be safe, I should go ahead and save this bank reconcile workbook. So in terms of, I'm at point 6 here. The question being, why do I forecast through January of next year, meaning January of 2022? And we can look at that way down below here. So in other words, I forecast out through, even though I know that, for instance, Social Security is going to change, Health Partners might change, Excel Energy might be different. But the reason I do that is one reason. It's just only this reason. It's because the federal and state estimated amounts end that month. So in other words, if you, and you can, we'll see that later on when we go through the drill of taxes that they're doing. It's April, June, September, and then the following January, both timed at the same for 15th of those months. Now you'll see once in a while, just in the forecasting, you may see, for example, like right here. Notice that's a negative amount. Well, as we get closer, that negative amount may disappear. For instance, because we've tended to be running less on U.S. bank card expenses than previously, or for the last several months anyway. So if, however, then it came that we really were going to, just because of timing, that say these payments to Treasury and State throw us sort of on paper into the red. Well, that's what I mentioned up here. You can just smooth that over temporarily by transferring money from home equity and then transferring it back. One last point about the worksheet before we bring it forward into the next year. The tax uses of this worksheet were important to some extent in the past when we were itemizing, but probably not so going forward, except for my business related expenses. Like, for instance, that abandoned deposit, that's not expense, but it's income. So I guess I should say income or expense. Like if they didn't give me a 1099 MISC, because again, you only have to do that over a certain amount, I think, if you've earned, then I'd want to go back here and count that as income. So thank you for hanging in there. This is the last part of it from point 9 on. So if you go back to the filter, you'll see that this workbook actually goes back quite a few years. Don't ignore the 2000, but it does go back with content until back to 2014. So the thing is, we want to take now all of the content from 2021 and bring it forward into 2022. And there's multiple ways you could do it, but I think the easiest is what I describe here. So let's go back to the transactions beginning in February of 2021. And I say February because, again, remember that, and I have to uncheck that because it was filtering out anything before March. So I can say here, starting from February, and I start February because, again, we already have January 2022 out there. So I can go through January of 2022, and I can copy. You can't see my mouse. If I just did a right mouse. You could also, these commands work this way too. Home, copy, same thing. So again, I'll do a right mouse. Come on, you little bugger. There we go. Copy. And we'll just paste that right there. So the next step is to then adjust the years for these transactions. Now, bear in mind, these are bringing in all of what's estimated, beyond beginning of April here. So it's not real, but in real life, you'd be doing this at the end of a year. So the amounts would be more accurate. So what I'm suggesting here is paste. We've done the copy and the paste, then change everything from this point through the end of the year, change it to 2022. And so just 2021 becomes 2022, like so. And 275 changes, and that's pretty good. And then you have to, because this is now actually January of 2023, we need to change that accordingly. Just that handful of records. A couple of dozen, yep. All right, so that's good. Now, and at this point, what I'd probably do is let's just filter now on 2022. So we can just look at 2022. So we're going to make our projection as well as then out into that first month of 2023. Well, this worksheet's getting pretty big. I probably could get rid of some of those old years. It would run a little bit faster because this formula in the column F is kind of resource intensive. So I might take care of that at some point here. So the key piece is we've now just brought forward all of these transactions. Now, some of them are going to be pretty darn close in terms of the date. Some of them are going to be off, though, because, like for instance, these look like they should all be happening on the first of the month. Well, maybe November 2nd turned out to be a Saturday or something. So, or I'm sorry, maybe November 1st turned out to be a Sunday. Let's put it that way. So maybe it's bumped forward a day that way. Now you can go in and tweak those if you want. It's not terribly important. Because again, if you saw the drill that I did on the fast forward, you can update those from month to month. If you want to, like I do, just because I'm anal and I can do this pretty easily. The thing to be aware of is really the key part is probably right here. We know that the Groveland amount will increase. We know that Health Partners and MetLife and Excel Energy possibly will increase. Your Minnesota teachers and PERA notify us by U.S. mail. Social Security is kind of goofy because they send a notice. I frankly not remembering this exactly right. They tell you like what is the amount of the increase going to be, but then they also say, well, then the Medicare amount's going to be this, and it's sort of like you have to calculate what is the new amount. So frankly, I think the last couple of years I just wait until the first payments come through and then adjust those. So let's just take that as an example. If we wanted to look at just Social Security, and let's just say we're looking only at your Social Security. So we can filter here for Social Security Kate. And let's say that Social Security Administration comes up with, well, let's say it's a 1% increase. So maybe it goes up to, which would be what, about $12. So let's add $12 to this. So instead of 53, it's going to be $12.65. So I can shift that like so. And then I can just drag that down and then watch how everything recalculates. And that's the pattern then for the rest of them. And this one I do tend to be, because the Social Security comes on the, and I think I may have skipped past it, I think it's the second Wednesday of each month. You may want to go in and adjust those dates. But if you don't, when you balance it, it'll be fine. Now, if I open everything up, there's going to be more tinkering once you get the tinkering required. Right now, you'll see some red here toward the end at various points, and that's something you want to guard against. If it's a one shot, like right here, if it's just a timing matter, then don't worry about it. However, if these amounts are consistently falling in the red, then we may have to increase the draw from Thrivent. But again, bear in mind, this again will shift because I'm almost certainly going to lower the amount of the estimated federal and state tax for the reasons that I'll speak to when we get into the tax situation. So I hope this hasn't been hopelessly confusing. And if you can think through a better way or pay somebody to do it, be my guest. It's worked very well for me, but again, we all have our own different ways of doing things. So give it a look and play it as often as necessary. Last point here is I mentioned at the very bottom, estimated taxes would also need to be adjusted, but that's a separate discussion, which we'll get to when we start talking about taxes. Signing off for now.